Today, residential construction approvals fall some more. Hello again, it's Martin North from Digital Finance Analytics, welcome to the latest post covering finance and property news with a distinctively Australian flavour. Yes, I know the Reserve Bank cut its rate today by 0.25% as predicted. Don't think that will have a particularly major impact on the economy, I have to say. But there was also some very interesting news from the ABS this morning, and that related specifically to the dwelling approvals for August. And they said that the number of dwelling approvals fell again, in fact fell 3.9% in August in trend terms, and they've fallen for 21 months now. And interestingly, the main fall has been in the high-rise development area, which fell 9.2%. And they said that across the states and territories, dwelling approvals decreased in August. In the ACT, down 27.7%. The Northern Territories, 8.7%. New South Wales, 5.4%. Victoria, 4%. Queensland, 2.3%. South Australia, 0.9%. Tasmania, 0.4%. And Western Australia, 0.2%, all in trend terms. And the private sector houses fell in Western Australia, down 4.3%, South Australia 1.6%, Victoria 1%, but rose in New South Wales, up 0.9%. And the total value of building approvals rose 1.1% in August in trend terms and has risen for 8 months. But the value of residential buildings fell 2.9%, while non-residential buildings rose 5.7% in trend terms. So we can see the pivot away from residential construction towards other sectors of the economy. Now, what I wanted to do, though, is to drill down into the state-by-state information, because there are some interesting stories to be told across the country. So let's look at Australia overall first. And this is a chart showing the number of units and houses approved month by month since 2015, and you can see that we were running at more than 20,000 overall approvals, and roughly half of those were showing as houses and the rest apartments and other units. And that dotted line shows you the relative proportion. So it's been sitting around 50% up till 2016. But since that time, and particularly up in 2018 and beyond, the overall ratio has crept up to 63.7% of all approvals being houses. And the other thing to note is that the overall volume is down. So we were tracking around 20,000, but now we're closer to 15,000. So the overall number of approvals, as we said, are significantly down. And I should explain that what I've done here is to smooth out the monthly trends so that we get a slightly clearer picture of what's going on. So having looked at the Australia-wide stats, let's drill into the details of state-by-state developments. So in New South Wales, approvals were running at around 6,000, and they climbed through 2017. But now they're easing back, and you can see that two trends there. The first is they're lower. We're now below 4,000 approvals, and 55% of approvals are now houses relative to apartments, and that's quite a lot higher than the trends earlier on, where around 40% of approvals were houses, the rest were units, including high-rise. And in fact, the data shows that it's the high-rise sector that has wilted significantly. And now, if we look at Victoria, there's a somewhat similar story with around 6,000 approvals. And back in 2015, around half were units, half were houses, but that's now crept up, and we reached 65.6% in August. And you can see that the total number of approvals are consistently down around 4,200 a month, compared with a peak in 2018 of well over 7,000. So let's look at Queensland now, and 4,000 is the average number of approvals a month. And that was running through 2015-16, and then the numbers have started to decline, and they dropped quite consistently to below 3,000, and now 66.5% of all approvals relate to houses. So the number of units approved has definitely declined there too. In South Australia, there's always been a higher proportion of houses relative to units. We've been seeing that moving around the 70 to 80% mark. And the volume of units approved has definitely dropped, and we're at 69.3%, and there's around 1,000 each month on average now approved. So that's a little bit down from its peak of 1,200 back in 2018. In Western Australia, the proportion of houses has been sitting around 70% or thereabouts, and we can see that through the last few years, the total volume of approvals has continued to slide quite consistently from a peak of well over 2,500 back in 2015 to well under 1,500 now, and 68.7% of those approvals are houses. In Tasmania, very small volume, around 250 approved, and the proportion has always been quite high in terms of houses to units, although more recently there has been a little bit of a spike in unit development, and at the moment it's still at 93.9% and around 250 approved each month. Now in the Northern Territories, we're seeing the monthly approval rate at around 140. It does vary a little bit, and the ratio of apartments to houses has moved around quite a lot, but we've got to the point now where the number of approvals are significantly down. So if you look at August, it's below 60, and of those, around 80% are houses. So unit development, which was going quite strongly back in 2015 and 16, has pretty much died away. And the ACT is the story in reverse. A large number of units have been approved over recent times. The number of houses relative to units has been sitting at around the 20 to 30%, although it's now spiked up to 48.6%. And it's interesting to note a couple of peaks. Firstly, in 2018, where total approvals were 900, of which 800 were for units, and another slightly smaller peak in May 2019, but more recently those numbers have dropped away. And so just back to the Australia-wide numbers, you can see that if you sum up each of the individual states, the story is pretty consistent. A fall in the total number of buildings approved, a fall in the ratio of units to houses, and a lot of those falls have been in the high-rise end of the market, and houses are a little more stable. And in Australia at the moment, 67.3% of all approvals are houses, but that's around 15,000 per month. At its peak, we were well over 20,000. So that really shows you the pressure on the construction sector. Now, some of that spare capacity will be picked up by the commercial sector and infrastructure building. But nevertheless, this slowing of approvals suggests to me that we're going to see a lot more difficulty ahead in terms of the residential construction sector. And that also shows that the supply of new properties will be somewhat depressed, although we do have an overhang of around 250,000 units which are under construction currently and will be coming on stream. Remember, there's an 18-month to 2-year lag between approvals and units, for example, coming on stream. Nevertheless, these are very worrying statistics, and it shows, again, the slowing of the Australian economy. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.